The best of Money Matters.
Market View on Money FM 89.3.
That's right. You're listening to Money FM 89.3. And it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch to help you better position your portfolios. I'm Alexandra Parada. The SCI closed up at 0.2% at 3,853 points. On the local front, DBS and OCBC saw positive movements, while UOB experienced a slight dip. This comes as analysts are closely watching the banking sector for potential shifts in earning guidance amid macroeconomic uncertainties. On a global front, markets are reacting to President Trump's comments about potentially lowering tariffs on China, signaling a possible shift in trade relations between the two countries. Meanwhile, Vietnam is facing its own challenges, with increasing U.S. tariffs threatening to disrupt its export-driven economy. Now, for more market moves and views, joining us today is David Kuo, co-founder of The Smart Investor. Hi, David. Welcome to the show.
Hello, Alexandra. How are you?
I'm doing great. What about you?
I'm doing okay. Yeah, it's been a good day.
Great to hear that. Okay, David, so the SCI opened at 3,856 points this morning, but slipped slightly to 3,841 points at around 9:28 a.m., reflecting a 0.1% dip despite the ruling party's victory in GE 2025. Now, what do you think is driving the market movements today?
Well, I think it's because the Singapore market has done pretty well over the last 5 or 6 days. Have you ever heard of the term, it's better to travel than to arrive?
Never.
Never. Well, I don't believe it myself. Well, what it really says is that if we're going to go somewhere, all the excitement of packing your suitcases and getting your tickets ready and going to the airport and getting on the plane is more exciting than arriving at your destination. I don't believe that. So the stock market also has a saying that it is better to travel than to arrive. And I think most of the people in the markets generally expected the People's Action Party to win this election. So they were traveling along, and then we've arrived. The results came out, and people are saying, okay, we knew it was going to happen anyway. And so consequently, they didn't really do an awful lot. So there wasn't a great deal driving the market. The market didn't go down today. It stayed pretty much as it was when the market closed on Friday. And so consequently, what we have is a proof that it is better to travel than to arrive. But if we have a look at the Singapore market, the two counters I look at most of all is the banks and also the real estate investment trusts. And quite a number of REITs were up there amongst the gainers. A couple of the banks were up there amongst the gainers as well. So I think the market can't quite decide whether interest rates are going to rise or whether interest rates are going to fall. So they're just sitting on their hands at the moment for now, Alexandra.
I see. Looking at the local banks now, DBS rose 0.4%, OCBC was flat, and UOB dipped by 0.1%. Now, what does this tell us about investor sentiment in the banking sector right now?
Well, they can't quite decide. If interest rates were to go up, then it probably means that the banks will be able to make a lot of money very easily. In other words, the low-hanging fruit for the banks is what they call the net interest margin. And that is the difference between the interest that they pay savers and the interest that they charge borrowers. When the interest rates are high, then it's very easy for banks to make money. But if we are on this path where interest rates are likely to come down, then it means that the banks have to work harder in order to drive their profits. It's not going to come from the net interest income, but instead it's going to have to come from other things, such as trying to lend more money to people or some kind of fee-based income that they can charge, wealth management. So whether or not that side will be able to take up the slack if interest rates were to come down, I think is worrying investors. But what I say to investors is, if you're going to buy a bank, then have a look for the next 5 or 10 years. And in 5 years' time, if I'm still around, Alex, you can ask me, is DBS higher in 5 years' time than today? And I think the answer is probably going to be yes.
But analysts did say that Q1 earnings for the banks will likely stay robust, thanks to strong wealth fees and trading income. But are these drivers sustainable into the rest of 2025 then?
I should think so. I think, there is going to be a lot more demand for the banks to try and make money for particularly the wealthier clients, because wealthy clients generally are not active investors. And what they do is they say to the banks, here's a sum of money, try and make some profits out of this for me. And, of course, the banks will be able to earn a fee from that. So will it continue to drive the earnings for the banks? I think we saw in the last set of results from the banks that the fee-based income was pretty strong. But will it be able to offset that net interest income that I was talking about earlier? Because that really is the low-hanging fruit for the banks. They can make money just closing their eyes with a net interest income. But the other side, they're going to have to work a little bit harder. But there are many banks in that space now. So it's not just our Singapore banks, but there are lots of overseas banks here in Singapore who also want to service those wealthy clients. And it depends on how big that slice of pizza is going to be and whether or not all the banks are going to be able to get a slice of it.
Now, some did say there's a potential 10 to 25% downside for Singapore bank stocks if micro conditions worsen. How seriously should investors take that warning? And what steps, if any, should they take to mitigate such risks?
Okay, I say bring it on, Alex. Yeah, I mean, if the share price of those banks were to drop by as much as 20 or 25%, I would be in there filling my boots. So all I can say is that it would be a great buying opportunity because ultimately I am a long-term investor and I am looking for the next 5 or 10 years. So if the share price were to fall, I would see it as a great buying opportunity. Other people may not think the same. Other people who are traders might think that it's a good opportunity to go and short the banks. But I say that these Singapore banks are pretty solid. Their balance sheets are very sound. And so if I were to see any kind of moderation in the share price, I would be out there buying pretty heavily.
Now, moving over to the global front now, President Trump said he's willing to lower tariffs on China at some point. Now, do you see this as a potential tailwind for markets, or is it too early to assume it will have any material impact?
Do you listen to Donald Trump? Because I stopped listening to him a long time ago. Didn't he say earlier on, Alex, that there were 200 deals on the table? I mean, there aren't even 200 countries in the world. And he said he's doing 200 deals at the moment. How many deals have we seen so far? I'll give you a clue. It starts with a Z, 0. We have seen 0 deals so far. So can we believe anything that Donald Trump says? I take it with a huge pinch of salt. In fact, I take it with a whole shovel full of salt at the moment. I think what we can say, Alex, is that America needs China, China needs America. And the sooner these two countries sit down and talk and try and sort of figure out where the differences are between them, then I think we will have some kind of tailwind that you're talking about. But at the moment, I don't see really a great deal of appetite from the Chinese side to want to talk to the American side.
But if the U.S. and China does agree on a fair deal, as Trump suggests, what would that look like for investors then? Could it spark a rally in U.S. and Chinese stocks? Would there be deeper issues to address even with a deal?
Well, the deal would actually sort of have to be beneficial to both sides. And as far as the American side is concerned, what they're saying is that the Chinese companies are benefiting from a lot of state intervention or state subsidies. And they're saying that this is grossly unfair, which is why he slapped on those tariffs on Chinese exports. But at the same time, China says that, well, that's the way we operate. So if you don't like it, lump it. But I think what we also have to understand is that the world is very interconnected at the moment, Alex. If there is no resolution to this, it means that companies will have to try and find ways in which they can continue their operations by moving their supply chains. That is going to be very expensive. So a deal would be the best possible scenario. But if not, I think businesses would still carry on the way they are. I don't think the world is going to come to an end.
Now, looking at Vietnam, despite facing potential 46% U.S. tariffs, its prime minister says they're still aiming for 8% growth this year. Now, for investors, is Vietnam still an attractive growth story, or are the risks of these tariffs too big to ignore?
No, I think Vietnam is still definitely a place for investors to have a look at. We have to remember that Vietnam is a developing economy, which therefore means that there is a lot of money that needs to be spent on the infrastructure. We have to remember that if you're going to be driving GDP, driving economic growth, yes, exports is important, but there are other things as well, such as consumer spending. The people in Vietnam, hopefully they're going to be a little bit wealthier now, and they will be able to drive the economy by spending some of their money. Then we have foreign investment going into Vietnam, and we have government spending going into Vietnam. So all those four things have to work together in order to drive the economy. If one of those levers, such as exports, is going to be playing less of a role, then I think the government has to sort of step in and say, we need more roads, we need more railways, we need more hospitals, we need more schools, we need more airports. Pretty much the same as what China did many years ago. When the world was going into some kind of recession, China stepped in and spent a lot of money. So I think the same thing will happen in Vietnam. So I don't think people have a great deal to worry about. Yes, exports is just one of the four levers that the country can pull in order to drive its economic growth.
Now, looking at currencies right now, the Singapore dollar has surged 5.3% so far this year, reaching its strongest level since September 2024. Now, what's driving this surge, and how significant is this growth for investors?
Well, I think currencies don't exist in isolation. Currencies exist in pairs. So when you're comparing the Singapore dollar, you're comparing against what? So in this particular case, we're comparing it against the US dollar. And I think what we can say is that the Singapore dollar is strong, not because the Singapore dollar is strong, but because the US dollar is weak. And a lot of people are taking a dim view on the U.S. economy, and so consequently the Singapore dollar was very strong, and I think it may continue to be strong for a while. And I think the other reason why the Singapore dollar is so strong is because many investors, particularly those in this area, see the Singapore dollar as some kind of safe haven. Previously, we always thought that the U.S. dollar was a safe haven, but you know what? There is somebody who is actually sort of making that currency not a very safe haven at all, and so people are probably sort of pulling some of their money out and putting it somewhere else. And Singapore has been one of the beneficiaries.
And we've also seen strength in other Asian currencies, driven by what analysts call a mix of repatriation buying and a sell America sentiment. Now, what's fueling this shift, and is it likely to continue?
I think it'll continue for a while until the U.S. administration comes to its senses, because at the moment, I think, in the view of everybody, apart from a handful of people in America, America is behaving very foolishly. And what we're seeing at the moment is probably some kind of Donald discount. In other words, they're looking at many of the American assets and they're putting a discount factor on it. It wasn't that long ago when we talked about American exceptionalism, where everything that was American was considered to be good. Now we're saying that many things in America should be treated with a discount because of the uncertainty that is surrounding not just the administration and what they're planning to do, but also the U.S. economy. It could very well go into recession, which therefore means that maybe the Federal Reserve will have no choice but to cut interest rates. And if they were to do that, why would you go into the U.S. dollar?
Now, David, I do want to discuss another major headline, and it's about Warren Buffett. He announced that he'll be stepping down as CEO of Berkshire Hathaway by the end of the year, with Greg Abel set to take over. Now, how significant is this moment for global markets and even long-term investors?
Well, I think it's quite significant for me, Alex, because if I've been in a job for 60 years, I too would want to step down and retire. And I think this is what Warren Buffett is saying, that he's had 60 good years at Berkshire Hathaway. He's done an awful lot for shareholders, and he is handing over the reins to Greg Abel. I think in the case of Greg Abel, he's been in that job for about 25 years. He's watched how Warren Buffett has operated. He's learned from the master. I wish many of us could learn from the master. I think in the case of Berkshire Hathaway, it will continue doing what it has been doing for the last 60 years. What we need to remember with Berkshire Hathaway is that it is an asset allocator. It doesn't go around picking stocks and say, I buy this today, such as the banks, and then I'll sell it tomorrow because I'm making a profit. If Warren Buffett goes in to buy something, he holds it for the long term. And I think Greg will do exactly the same thing. So as far as investors in Berkshire Hathaway are concerned, you couldn't have a safer pair of hands than, I think, Greg Abel. But Warren will still be there. So it'll be a bit like in the old days when Warren, together with Charlie Munger, his partner, would run the company. I think in this case, Greg will use Warren as a kind of sounding board and say, what do you think about this? And then Warren will give his views, but he says, you'll probably turn around to Greg and say, it's your call. If you think it's a good buy, go ahead and buy it, because I have 100% faith in you. The other thing that Warren said was he would not sell one single share in Berkshire Hathaway when he steps down. So I think that gives not only the company, but I think shareholders and I think a great vote of confidence.
And before we let you go, David, what else will you be looking at in the coming days? Anything that's on your radar now?
Federal Reserve. The Federal Reserve has an interest rate decision, and it'll be fun and games once again, because whatever the Federal Reserve does, I think will be wrong in the eyes of the President of America. I think the Federal Reserve will probably sit on its hands, do nothing, and I think that is going to irate Donald Trump, and he'll have something to say about the Federal Reserve not cutting interest rates as quickly as they should. So Federal Reserve, and I think lots of people will be hanging on that just to see what Jerome Powell has to say about the U.S. economy.
Well, thank you so much for joining us today, David.
You're welcome. Thank you, Alex. It's been great talking to you.
Been great talking to you as well. That was David Kuo, co-founder of The Smart Investor. This has been Market View on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.